Great. So we are doing our analysis now twice a week, as you had all kind of wanted it to have that way. So we are doing now twice a week. So Wednesday we will be continuing our swing trading chart analysis, and also on Saturday we'll have a look at how the week was, weekend sort of, and what we can do in the next week. So for those of you who are joining new and who have never been to the stream before, so we will be doing chart analysis for the stocks that I have in mind. Also, you can also put your stocks on the chat box, so we can analyze your stocks also, right? Let us start off for today. First off, the disclaimer: I'm not a SEBI registered analyst, so discussions that we do here are not trading or investing recommendations, but they are intended purely for educational purposes. Right? We'll be discussing charts, swing trading, and we'll be using mainly two indicators, that is Bollinger Bands and exponential moving averages. We'll also use the screener, which is a charting screener, and we'll also have a look at the trading journal to look at what has happened in the stocks that we had looked at before. Okay, so let us move to chart analysis. This is the Nifty chart for the week, and if you remember last time we had a discussion regarding the market to reverse and reach up to the 20 SMA, which is around 16,900, 17,000, but it has lost steam midway. After 16,800, it has lost, kind of exhausted the steam and going down. I still have a faint hope that it will recover and go up still and not break this support that is here. If you look at here on the daily chart, it is quite close to the 20 SMA support here. So I still expect, unless it breaks this support, I still expect it to take support here and move up a little bit more further, or maybe consolidate in this range. So for me right now, even though there are two red candles here on the daily chart, I still don't have a feeling that a downward bias. I still have a positive bias, and I still think that the market will take support here and move up a little bit more further up. Now today was the RBI policy, and as expected, the RBI monetary policy has raised the interest rates by another 50 basis points, that is 0.5%. This was expected on expected lines, and what the RBI has said today is that the inflation situation is expected to continue for the financial year 2023. So at least this year, this inflation level is bound to continue, and the RBI has forecasted around 6.7%, which is on the which is beyond the tolerance band of the RBI. The upper band for tolerance is 6%, so 6.5% inflation, which means that the stock market will not give any kind of a substantial return in this year. That's what it means. It will be range bound, so it will move up, it will come down, it will move up, it will come down. So till the time that the economy is able to adjust to the inflationary pressures, the market will keep moving up and down and not give us a trending move on either side. That's what it is likely to be. Also, the debt market will again, because of the interest rate hike, the long-term debt will again see erosion in its values. So short-term debt, again, because of the short-term nature of the instruments, they can reinvest at a higher rate. So short-term investments, short-term debt investments are the safer ones in the debt market also. So all in all, we are navigating a difficult time, both concerning the debt market and the equity market. Does it mean that we should put out all sell everything and remain in cash? Not that's not the meaning. The meaning is that you should clean out your portfolio. Clean out your portfolio and invest in defensive stocks, invest in blue chip stocks, which are available at low prices as of now. So you want to put in safe stocks, so to say, safe stocks, and try to be a little bit more defensive side. Yeah, that's what it means, right? And for all the debt instruments, you want to be in the short term debt market, right? And if no opportunity is available, it is also good to sit on cash. A little bit more cash on the portfolio is not a bad idea at the moment, because market will give you dips, and at those times you will need the cash to get some good value buys and long term value buys in your portfolio. So yeah, bank nifty again, it is losing steam here, and not moving as per expectations, not going beyond the 20 SMA, and this is primarily due to the rate impact that we are having. But again, as I said, my expectation is still on the positive side, mainly because of the IT sector, and I expect this move to continue. This IT sector has been beaten down quite a bit, and it showed a reversal candle here. Although this week is a red candle, I expect this to move beyond the high of last week and take up this space over here. This space over here is the one that should be giving the move to Nifty. Yeah. Yes. Okay. We'll have a look at your stocks also. No, I'm not saying sell regardless of anything. I'm saying that you have to be, your conviction has to be very strong in terms of why you have bought it, or what time horizon you are looking at, and things like that. And if you are invested in a dud stock, a dud stock meaning a stock that is not fundamentally strong, then with every rally, it is a good idea to clean off your portfolio. That's what I'm saying. I'm saying that you stay invested in quality stocks, but if you have dud stocks in your portfolio, then you should be cleaning it up, with every rally that you get. Okay, so your conviction level will help you determine whether you want to hold, or whether you want to even book a loss or get out of those stocks, right? Even if depending on what kind of stock it is and what is your conviction level and logic of buying it, right? Yeah. So yeah, let's have a look at the stocks that you are saying. Hindustan Unilever. So Hindustan Unilever, if you are looking at from the short term perspective, right now there is no good, there's not a good entry point here unless it shows the green candle from this 20 SMA. It might take here support at the 20 SMA or go down. If it goes down, then probably it will weaken till this level here, till the till 2067, or the lower Bollinger Band at below 2000. If it breaks down this from this support level here from 20 SMA. Okay, if it takes support here and moves up, then that may be a good entry point for you to move up to the 20 SMA, up to the upper Bollinger Band, right? If you're looking at it from the long term, definitely Hindustan Unilever is a great buy, and it is a defensive stock. And I want to look at the exponential moving averages when we are looking at the long term. So hold on a moment. Okay. Yeah. So this is we are looking at a monthly time frame for Hindustan Unilever, and I have put in 10 EMA and 20 EMA. Now, as you can see on the monthly time frame, the 10 EMA is right now very close to the 20 EMA. It has not given a breakdown till now, but it is very close, and the price is moving lesser than the 20 EMA. So this is definitely a good time to accumulate for the long term. Okay, the earlier analysis that I did was for the short term, but this for the long term, below the 20 below the 20 EMA, and at a at a support level, right? So this is definitely a good point of accumulation. Anything, it's right now it is at 2197. So anything, even if it comes down a little bit, it might also come down a little bit if it, again, as it breaks a 20 SMA on the weekly, it might come down a little bit. So but this is a good accumulation point, definitely for the long term, I'm saying. Yeah, let us go back to if we are even in a swing trade, okay, we are holding for a couple of weeks, a couple of months, maybe a 1 month or 2 month or so, right? This is not an intraday trade. So it is, if you want to be on the safer side, it is good to have strong companies. Now when I was talking about fundamentals, I was in fact talking about long term. But even in the swing trade, you would have seen, if you would have seen my earlier streams also, I, even in the screeners, I limit myself to Nifty 200 here. When I put the screeners also, I live in the 200 top companies only. Why? Because there can be a lot of market manipulation in the other, the broader spectrum of the market. And sometimes what happens is the stock, if they are moving in very low volume, they will be moving in circuits, right? Either upper circuit or lower circuit. And if that happens, then probably you will find it very difficult to get out of the stocks when you want to exit the stocks. All those kinds of problems which are related to market depth, right, you will not find in the top 200 stocks, because the liquidity is there. And therefore, for the systemic issues, you still want to you still want to remain with the top stocks, even if you are doing a swing trade. That is my personal preference. If you want to go outside, take a risk and all that, that is your choice, definitely. But that is my personal preference, is I stay within the Nifty 200. And when I get so many opportunities within Nifty 200, I don't need to go out and invest my money in any kind of a dirt stock. So that's my personal preference, and that's how I do it. Right, for the long term, definitely you want to look at the fundamentals, right? And yeah, so let's look at Bank of Baroda. Yeah, Bank of Baroda again showing strong reversal since the last 2 days, but as of now you cannot take an entry here, right? Because your stop loss is too deep. So you want to wait till it crosses the 20 SMA and then take 20 SMA as your stop loss. That you can do. Looking at Mindtree, yes, Mindtree. I think we had a discussion about Mindtree and LTI in the last stream that we were having. So yeah, here it gives you a good entry point at this point here. The reversal candle on the last week was a good entry point again, but now it has not gone up too much. It is still there. So you will get a good risk reward ratio. You can the 20 SMA is at 3669, right? So you have a good 600 rupees upside potential with around 300 on the downside, right? So almost a 2:1 risk reward ratio on this stock. So yes, it does offer a good opportunity. Info Edge Naukri. Naukri has been a little weak after all this IPOs that have come in, Zomato and all the other things that have been coming. You can see here, even the reversal is not sustaining. It should, okay, from October 21, it is showing huge red candles. 1, 2, 3, 4, 5, 6, 7, 8, and almost 9 weeks. You can see huge red candles here. Okay, that is, it's not a very, what should we say? It's not a very satisfying sign, especially because of his investments in all the new age companies, and the IPOs have been, the IPO stocks have been beaten down, which is why this stock is also being beaten down. And here the reversal was there, and probably a very short trade was there also. But again, the reversal not sustaining. If you see, if you had taken this stock at this point, it went really close to the 20 SMA, very close to the target, not quite reaching there. But again, showing sign of weakness. So not a good sign at all. So Venu, if you want to look at volatile stocks and make money on the swings, you will get a lot of opportunities in the Nifty 200 also to make a decent amount of money, and with the swings inside the Nifty 200 also. But all those all those penny stocks and all those stocks which move in circuits, it is glamorized to a lot of extent. It is not so easy. If it moves in circuits, you won't get exit if you're trapped in that kind of stocks. So if you want to take a risk with that kind of stocks, it is up to you. But what I feel is that when you have so many opportunities in the top stocks itself, and they are giving you good amount of swings, then why should we unnecessarily take risk with the dud stocks? Not needed. If you want the thrill of a roller coaster, please go ahead and do it. But that is only for the thrill. It is not for making money. It's not necessary for making money. Okay, Britannia. Britannia has gone down the 20 SMA, so it might go down further in the coming weeks. You see that it had showed a smart reversal, quite a bit of volatility here in the first week of May, and then sustaining and going up to the upper Bollinger Band. Right from there, the selling has come in strongly, and it is going below the 20 SMA. So further weakness possible in this stock. Right below the 20 SMA, it won't it won't go up. It will likely to go down. So Vivan, I'm unaware of this letter about the Sequoia letter saying public markets are unlikely to see a full reversal for 2 years, but it is quite expected. I have been saying on the stream also that the level of inflation that US is seeing and we are seeing, it will take at least 1 year for the economy to stabilize, for the due to the inflationary pressures, and also because of the war, the supply disruptions. No solution is being is seen in the near future. So till the time that this inflationary pressure and the economy is able to adjust, the stock market will not give a definite trend. It will just keep moving up and down. So it will not give a return. So that I expect at least 1 year, at least 2 quarters, and then further in the third quarter. So even today's RBI policy said that 2 quarters they are expecting high inflation and probably a cooling off in the in the last quarter of this financial year. So in that sense, a 1.5 year is definitely a difficult time for the equity market, and it may not give a substantial return. The last year was abnormal year, unprecedented type of a move. So it has to go through a little cooling off period, right? And so that kind of that a cooling off period will come here in the next 1 year at least. I'm saying 1 year at least. 1 year is my personal perspective, but I don't know if Sequoia is saying about the US market or Indian market. My feeling is that the Indian market is much more robust and has seen much more inflationary pressure in the past, and we have come out of all that. And we have grown at 6-7% in spite of all the pressures. But the US is seeing inflation after a long time, right? So for them it is being much more difficult. So as far as the Indian economy is concerned, we are still more robust and we are able to handle all these pressures better than the other emerging markets. But what will happen is that because the markets are so tight, so connected, so the global effect in the US market will definitely have a bearing on the Nifty also. So there will be a pressure. If the US markets go down, our markets will also go down. So there will be that pressure. But what is sustaining us? In fact, the Nifty has not fallen so much as the Nasdaq or the the S&P 500. We have been sustaining because the domestic market and the retail investors are sustaining the market. So keeping that in mind, we are not. I don't think we are in for a huge downside, but we are not also going for a substantial upside also. So till this time, so one and a half year old, it is important for us to navigate our personal investments, especially long-term investments. We have to navigate and keep it in defensive stocks or value stocks where you are able to find value for the long term. So that is the strategy to follow, at least for this year. Don't take undue risk is my personal advice, would be my personal advice to all of you. Okay. Did we look at Britannia? Yes, we did. Wipro. Hard to say. This is showing weakness, but I'm still expecting the Nifty index to go up, but hard to say right now, especially in case of Wipro. Hard to say. I'm expecting the Nifty index to go up from here and not have, although this is showing a red candle, I'm expecting this to go up. So if this does go up, then Wipro will also show a positive move. But as of now, the chart is not showing it. Right? The chart is not showing it. So don't enter any kind of a fresh trade unless you get a confirmation. Right now, the chart is showing weakness on the Wipro charts. Okay, let's look at Renuka Sugar. Consolidation here, a closer price to the 20 SMA would give a good entry point, 43.10. Right now it is much away from the averages. So no good entry point for a swing trade here at this point. Either it has to come down here, close to the 20 SMA to give you a good entry point. But it is consolidating here, not going down. Pharma sector is too bad. So as of now, nothing. I think we should not be touching pharma as of now. See this 20 SMA. Although there has been a little buying when it went below the 20 SMA and holding the 20 SMA, trying to hold, in fact, the 20 SMA. But if you look at Nifty Pharma, it's in a bad shape. Look at this. Nifty Pharma is in a bad shape, right? And if it does not show a reversal from here, there's possibility of the Nifty Pharma going down again. So as of now, weak, and don't touch any pharma stocks for any kind of a swing trade. Not available, I think. So Dr. Reddy is also showing weakness. bad for the is it bad for the startup folks? See, this is a good time for a long-term investor. If you're That's what we have been saying all through, right? If you're able to find value, in a strong potential stock, which you can hold for the long term, then this is the time to do that, right? So for any kind of a person who is, for a venture capitalist or a person who is kind of looking into a startup, they, for them, what is the opportunity? The opportunity is that, are they able to get into a good company at a lower valuation? Probably that is what they would be looking at. If the market is bad, then it is a good time to get into good investments, right? So there can be people with contrarian view, and those are the kind of people, if their views go right, those are the kind of people who make a lot of money in the market. So I won't say that things are bad for the startup folks. Also, although there are a lot of media reports that say that startup funding is now being, there's much less startup funding, people are getting laid off and things like that. But I think even those people who are funding would be looking at good companies at a better valuation. So if you're able to offer value for money, I don't think uh, you know uh, I don't think there should be a problem for the funding. Of course, it will not be all glamorous and everybody become a unicorn, and वो सब शायद थोड़ा कम हो जाएगा. लेकिन otherwise, what we should be looking at is trying to offer uh, value. Even as a startup, we are trying to offer value and say that, sir, we are offering value for your money. If that is there, then sorry, sorry. I don't want to shatter anybody's dreams. But just stating the fact of the market, right? If I'm an investor, what would I look at, right? Looking at it from the other side of the table, if I'm an investor, what would I look at? I would try to look at a good company, which I'm able to get at a lower valuation, and so a possible higher profit in the future. That's what I'm able to look at. And at this point of time, if I'm able to get such kind of a company, that's that's a, what should we call, that's a good trade to have. That's a good trade to have. Uh, that's what I would be looking at, right? Sorry, I don't want to shatter anybody's dreams. Let's look at Titan. Not sustaining the reversal. So this green candle over here, it had showed a promise in the last week, but not sustaining it. Nestle is a stock that you could, or you should have for the long term. Amazing stock for the long term, but no swing trade opportunity here. Uh, but for the long term, this is an amazing stock. See this trading below the 20 SMA, and at this at a support level and the congestion level here. So 16,723, good price. In fact, in the last month, you see it went down to 16,000. Round figure, 16,000 is the low, and quite a lot of buying the moment it reached 16,000. So trading below the 20 SMA, good to accumulate for the long term. Good to accumulate for the long term. But as we saw, no trading opportunity for a short term swing trade. Right. HDFC Life. If you are already in this stock, I think you should take an exit, because it is not going up. It it is trying to reach the upper Bollinger Band at 632, but not able to, right? Showing weakness here. So in all likelihood, it may consolidate here or go down. But if for a fresh trade, again, there is no entry point unless it is close to the average. We cannot take an entry here because the stop loss will be very deep. So for a fresh trade, no entry point. If you're already in there, probably book your profit. Okay. So looking at Nifty Metal now, see Nifty Metal is even though it has not shown a confirmation and not broken the high of the last week, but still the candle is green, unlike the other indices. So kind of consolidating here, right? So let's look at some of the metal stocks if they do give any kind of a opportunity here. Not quite there. Hindalco. Tata Steel, okay, on the verge of breaking this high. The high is 1092.80 and the CMP is 1086.75. So if it breaks the last week high, can give an opportunity here up to 1219, right? If the metal index supports this. So there is an opportunity here at Tata Steel. Maybe can be an opportunity here at Tata Steel. JSW Steel. In fact, yes, I did run the scanner and JSW Steel did come up on the scanner. So JSW Steel, ONGC and IDBI have come up on the scanner. So JSW Steel in the metal sector can give an opportunity. Again, it has not broken the high of last week. The last week high is 581.95. CMP is 576. So if it decisively breaks 581, 582, there can be a upside move in the metal space. So possibility of a swing trade over there in the metal space. A couple of stocks, Tata Steel and JSW Steel. Although it has not given the confirmation, you can keep it on your watch list and look at it if it does break the high of last week. The other stock on the screener is ONGC. No, it's moved up too fast, so no opportunity for entry. Okay, let's see IDBI. Okay, IDBI Bank. Okay, IDBI has this opportunity. It has broken the high. 37.45 is the CMP, and the 20 SMA is at 43, and probably a congestion level here at 43 also. Resistance at 43, the stop loss at 33. Okay, so a 4 rupees stop loss, 10 rupees on the upside. Okay, so quite a favorable risk reward ratio available in IDBI Bank. So there are a couple of opportunities in the metal space, and also IDBI Bank showing a reversal from the bottom. We were looking at HDFC AMC in the last stream, and it was quite interesting because there was a lot of volume happening. Let's look at that stock again. You see this HDFC AMC sustaining here. And this was the interesting part that we looked at in the last stream also. Quite a bit of volume in the last week, 9.20 million. Okay, I think something this is an unusual volume. So either some deal is happening or some kind of thing is cooking here, and so this might give you a good opportunity here to move up to 2072 or even beyond the 20 SMA. Okay. And the lower Bollinger Band is a bit deep at the moment, so you can take the low of the previous week candle as your stop loss, which is 1808, So almost 100 rupees stop loss, and an equal amount or a little more than that on the upside. So not quite a very good risk reward ratio, but 1:1 or little more than 1:1. But this is interesting. The volume. This is interesting. Okay, so this might give you a good run in the next couple of weeks. Okay, what else do you want to look at? So just looking at the journal here, the Voltas was the one that we had on the first June stream, and it has hit the stop loss here. And but the other three, LTI, Emphasis, and Punjab National Bank is what we looked at in the last stream. They have still not hit the stop loss, and they have not hit the target as well. So we are still there. The overall loss on the portfolio is 4%, 4.34%. Right, not bad for such a bearish market. And like I always say, because we have the risk reward ratio, as you know, you can see the risk reward ratio here: 3.19, 3, 4, 4, 2.45, 17 in one case, 3, 4.91, 7, 2.65. So we always have the risk reward ratio, at least I think here a minimum of 2, right? Except in Voltas, there was a minimum of 2, which means that just 25 to 30% of your calls go right, you still end up with no profit, no loss, right? So you only need 3 or 4 calls out of 10 to go right. And if you can do that with 100 calls, you can make a decent profit here in swing trading. Okay, so that is what we are aiming at, and I'm trying to keep this journal depending on the stocks that we mentioned here on the stream. And so far, you can see that all the stocks have gone wrong except Hero MotoCorp. And Hero MotoCorp gave us 8.31%, right? And that is, give us a good amount of cushion. The overall loss is 4.34% as of now. And we are doing this for approx 2 months, right? So this is the kind of thing that it's good to focus in this way, so that we enter into only those trades which are highly probable, right? And which don't, even if they hit the stop loss, they don't give us too much of a loss on our portfolio. When we consider the overall portfolio, only 4.34% loss, which is quite decent in this time, right? And as soon as the market begins to recover, we will also find much more swing trading opportunities, and our calls will go right much more than this, which will again boost up our profits. But only thing is to follow the system, and don't make too much of a deviation. In fact, I've put a column here, deviation, to mention if there is any kind of a deviation from the strategy that we are following. So till now we are not making any deviation. We are waiting till the stop loss, we are waiting till the target, and we have a solid entry logic and exit logic also, right? And if you follow the process, things are good, right? Things will be good. No need to worry. What sectors are doing well as of now? None of the sectors are doing well, but we can say what are doing bad, right? So we looked at the pharma index. I'm talking from a swing trading perspective, okay? So we looked at the pharma index here, and you look at the pharma index, it is extremely bad in the last 3 weeks, beaten down, and probably will go down a little bit more further, right? And which sectors are doing well? We saw that metal is trying to hold on to a recovery, although not quite, not quite taking out the last week's high, but holding here, and probably a couple of opportunities that we saw in JSW Steel, Tata Steel. So this might give a good move, right? And we also saw the IT. This is what I'm expecting to go up, although it is not showing on the chart right now, but it has got some space here at the top because it was beaten down in the last couple of months. So in case the Nifty has to go up further, this is the sector that has to perform. right? So metal and IT as of now giving some space for swing trades. Pharma, no. And we did not look at Nifty Realty. Let us look at Nifty Realty also. Not quite there, right? Consolidating. Okay, so no, not quite there. No entry point. No, I don't think nothing in Nifty Reality also. So IT and metal should give opportunities for swing trade, although it's not a very good sentiment in the market. But those are the two sectors that can give opportunities for swing trade, right? Okay, I think we'll call it a day now. So capitalworx.in, please do connect for any thing related to mutual funds, equity, insurance, portfolio management, or training. And once again, thanks for joining. The email is ideas@capitalworx.in, and you can have my. It's also there on Linktree, the Capitalworx. All the other channels are there, and yes, I can share that Excel. I think I have the link in here. Hold on. That is a link. All I have not made it. I'll okay. Just give me some time. Tomorrow, maybe you can check the link when I make it. Shared to all, because I may not have made it shared to all, so you might not be able to access it. So wait for a day, please. But that is the link. It's public, is it? Okay. Okay, fine, fine. If you're able to access it, fine. Okay, great. So thanks once again for joining. Those are the connect points, and do connect with me for any kind of uh, help that you would need on the financial space. So we'll be coming up with some options also for training, mentoring, and portfolio analysis. We'll be coming up with some of those options also. So once again, thank you, and see you on Saturday.